Well, with all the headlines focused on the LinkedIn IPO over the last couple of weeks, you might think the U.S. IPO market was back on track. Well, year over year, the market has definitely picked up. The number of deals priced so far in the U.S. in 2011 is up 40%. But the long-term trend tells a much different story. And joining us today is David Weild. He's head of capital markets at Grant Thornton, and he's also former vice chairman of NASDAQ and has spoken widely about how the decline in the U.S. IPO market is rippling through the rest of this country's economy. David, welcome. Pleasure to have you here today. And, let's talk about some of these long-term trends. U.S. stock listings down by 43% since the peak back in 1997. But overseas, very different stories. Number of listings has doubled. Why has that happened?
Well, our market structure no longer supports small companies going public. I mean, really what you saw is that 80% of IPOs used to be sub $50 million, adjusted for inflation, probably $75 million. And that market has been essentially decimated. And it's not really because of Sarbanes-Oxley. I mean, clearly higher costs are an impediment to going public. But if you look at where the bottom really dropped out, it started dropping out in 1997. And of course, Sarbanes-Oxley was not until 2002. So if you look at it, there was something called the order handling rules, this sort of ideology that gripped the SEC about more efficient trading. And it may work for large cap stocks, but it's taken the economic incentive out of supporting smaller companies, which represent over 50% of listed companies in the United States.
Now, you have done quite a bit of research on this. You've put together a lot of information related to this. And you actually pointed out that Intel is a stock that in today's environment wouldn't be able to go public, right? But the list of those types of companies is quite long. Now, the question I had when looking at that is, well, maybe they wouldn't have been able to go public when they did, but they would have been able to list later. So why is it important that we have smaller companies able to list?
Well, to kind of paraphrase information out of the National Venture Capital Association, it used to be 15 years ago that 90% of the exits for small companies in venture capital portfolios were to go public. They all went IPO. And today, probably about 90% of exits is exclusive sale M&A. They're being acquired. So to answer your question about Intel, in today's market, Intel, which was not profitable on an operating basis and only 3 years old when it went public in 1971, that company today might get gobbled up by a bigger suitor.
And what does this mean, David? Connect the dots here, because this is fascinating stuff. What does this mean in terms of the U.S. economy? You say this is a very bad trend for the overall U.S. economy.
Yeah, we actually think that if you could set back the clock and have a market structure that was much more benevolent to companies going public, that we actually could create 10, 20 million jobs over a decade as a result of a really robust IPO market and the trickle-down effects of more and more investors investing in private enterprises and small businesses. That this is really a watershed effect where we've ratcheted down the level of activity in the U.S. economy, not just through IPOs, but through people's risk aversion to investing in private enterprise.
All right, fast forward 5-10 years from now, do you see this trend turning itself around? Is there anything on the horizon that would bring these IPOs back to the U.S. that would make listing for smaller companies feasible?
Well, we're advocating, if you will, that the SEC and ultimately Congress step in and create some better market structure, if you will, a new market structure that actually provides the incentive for small firms, small brokerage firms, to get out and push the research in place and the sales and the capital commitment, because most capital has been stripped out of positions today, so there's no liquidity creation in these small companies any longer, to get America back into business. I mean, we can really just create a much more receptive and supportive and nurturing sector for small companies, and take the burden which has been shifted onto the backs of CEOs to go out and meet investors and then put it back where I think it rightly belongs, which is on Wall Street.
All right, David, appreciate you joining us today. That's from a very different perspective on the IPO market that we have here in the U.S. That was David Weild, head of capital markets at Grant Thornton.